This is Market Week Live for July 18th, 2025. Information and support for traders and investors. Welcome, everybody. Still have people coming into the room, and hi to everybody out there on YouTube. Glad you are joining us. And those of you that are watching this clip, we have a lot to show you. We're going to bring you our express round where we're going to have our level 1 to 4 members ask questions. The floor is going to be yours. Topics, well, anything about our services, trade planning, chart analysis, trading issues. You can bring any of that up, and we'll do our best to answer your questions. Remember, level 1 to 4 members get to ask the questions and come in here. They're sent a special link. So if you want to be a participant, please do sign up for level 1 to 4. And Matt's going to show you in just a few minutes how you can become a level 3 member and participate in this way for an amazing price. He'll bring that to you in just a couple of moments. And then we're going to bring market analysis of the stock market. We'll look at the probabilistic projections in price and time on the S&P 500 and NASDAQ Russell. I'm also going to bring in the RSP because that's an interesting chart to look at because it's a little bit different and it's equal weight and looks different than we see in the S&P 500 and the NASDAQ. So we'll take a look at that. And you'll see our proprietary studies, analytical process, a market condition monitor, which is just an amazing application. You want to get acquainted with us? Go to askSlim, go to the top of the page to free stuff and sign up for SIR Lite. If you're brand new, you're going to love that. You're going to get information daily on the S&P 500. Matt does a spectacular job on that one. On YouTube, do subscribe to this channel, click the notification bell, and like this video, give it a thumbs up. And on X, follow me at askSlim. Questions you have, write to Matt at askSlim.com. Everything that we do on this website, everything we do in our videos, whether it be oral, video, written, however we present it to you, is meant to be for you to discuss with your investment advisors or those that help you with investment decisions. We always want you to consult your own trading plan before you take on any trades, whether it be information from us or anywhere. Our contact information, membership issues, website issues, write to team at askSlim.com. Anything on our content, education and analysis, first-time specials, upgrades, any of that, you can write to Matt at askSlim.com. Our host today, well, it's me, Matt, Arvie, and Katie. Of course, I've been around now for 51 years. First joined the CBOE as a member in May of 1974, so 51 years. That's just amazing. Matt's been around for a couple of decades, as has Arvie, and I don't know Katie's whole trading history, but she's been with us for a few years and fantastic knowledge that she has on cycle analysis and on option trading. So just a amazing team that we have here. You want to learn more, go to About askSlim, meet the team, see the interviews we've done, and you'll learn more about us. All right, so we're going to jump right into the comments and questions. I can see that there's a couple up there. Somebody wants to see the SPY monthly, so I'm going to add that to my stock market analysis. We'll look at the SPX monthly is what we'll look at for that member, so we'll get to that. Other people, you can start to put up your questions right now. I see what's coming up here is natural gas for me, the Japanese yen, silver. For the team, I see Disney and Micron and some other ones starting to come in right now. So put up your questions. We'll take them for about another 5 minutes, and then we'll answer your questions, and we will get to the real meat of what we do, which is how we present our analysis and use this multiple time frame analysis and our proprietary studies to come up with the sum of the evidence where we believe is the highest probability based on everything that we see. And I think that you will see that there's a lot of value in that. So I also see MSTR and Tesla. I think we have all of those. Okay, so I'm going to move on. I'll look at natural gas. And I'm going to look at, somebody's asking for 6J. I don't have 6J prepared. I do have the Japanese yen US dollar, which I can look at first. Then I have another question that a member sent in, and I'll take a look at that one also. So let me switch over. Didn't want to go there. Let me move this down into the charts. And I'll blow this up, and we're going to go into US dollar JPY. So I often take a look at the 6J. I just haven't updated it for this presentation. This is US dollar JPY, and what is just screaming out at me is a massive head and shoulders top that's forming in there. It looks like it's completed but didn't break down. Interesting when you look at that, as you see the left shoulder in here, the head, which is kind of a compound top in there, and then the right shoulder. One of the key things about cycle analysis and what we discuss in our cycle analysis workshop is that all these formations that you see are formed by cycles. In other words, it's the rhythms of the market. You can see that this cycle here formed the left shoulder, this cycle here formed the right shoulder, and then the head was formed in this multiple cycles, these two that you see right in there. And then when it got down right over here, why did it not break down? Why do we see the dollar not break down? Well, it ran out of time, as you can see right over here. It was completed this downside move and now has gotten into a positive momentum right in here. So that means the dollar is moving up versus the Japanese yen right in here, but moving up in quite a feeble way. You can see when you look at this rally over here, how far that went up in this rising phase comparatively to this one where it's gotten up to not quite the 50% level right there and has stopped, and it's used up so much of this time that it could rally. That just tells you that there's a period out over here where the dollar could be falling pretty sharply. So we would look for the dollar at some point in here to give us signs that it's peaking in there. Right now you could see momentum is still positive. So we don't have a reason to believe yet that it's rolling over. When I look here at the daily, you could see right in here that you have beautiful harmonics in here. These are the cycle brackets, which are the rhythms in the market. That's a drawing tool. People write to me, what is that indicator? It's not an indicator. It's just a tool that helps us visualize the rhythms in the market, the money flows. Cycle analysis is an observational style of analysis. So essentially, you look at what these formations are, you look at how they're responding to price levels, and you look at how they're responding based on the momentum indicators that we look at, and then you can come up with a summation, is what essentially we do. So you can see in here, I didn't quite update this yet. This is what we're looking at right in here. There should have been a little decline in here. So this structure that you're looking at right in here is positive. So we have a positive structure in here. We have positive momentum that you could see on the slim ribbon PO, and the option bias indicator, all of them positive. I tell you that while I'm telling you that this is ultimately a long-term negative uh, uh, chart that we're looking at here. So while that's negative and this is positive, we look at the short-term patterns to say this still is not a completed rally. This looks like maybe this little decline was already the pullback. Maybe there's another little pullback here and then moving up again. So we could project something like this coming up to the resistance in that area right there and still looking at things positive. This would have to turn into negative momentum. We'd have to see price levels get below whatever low it made in here for us to then say it's made a top and is turning down. But right now, the highest probability is the US dollar will still be in this rally phase versus the Japanese yen. Now, the US dollar in itself, in my opinion, has a lot of trouble. And when we have a situation where U.S. interest rates are likely to come down at the same time that Japanese interest rates are going up, we have a situation that can trigger the reverse Japanese yen carry trade. People borrowed money in Japan, but invested the money here in the U.S. But when that reverses, it causes selling in U.S. assets. We saw that happen before, and that would be a bad sign. So that would be when this turns down in here and you begin to get into this declining phase that we have right over here. And when that happens, momentum will have been turned negative. Right now, even though I say it's in resistance, it's not a short. If anything, it's setting up for a short-term long in here if you were a short-term trader. So wanted to present that analysis in a way that you really understood it, in that just because this says that it's in a resistance area, it's showing us that it's not ready to turn to the downside yet. So that is a look at the Japanese yen. Let's take a look at natural gas and silver that I see are requests for me. /NG, we'll look at here. We need a forward slash. And here we can see, actually I want to blow this up because the harmonics in here, and we say harmonics, meaning the money flows, the motion in the market are spectacularly good. You can really see the beautiful long-term patterns that we have in there. This occurrence where you had this rally where all three cycles were pushing up, and this was a positive cycle, said the odds are you're going to take out that high, and it did it. However, it came down and then took out this low. That said to us, it's pretty good odds the next rally was going to fail in resistance. And you can see in here, it's actually done that. So now we're getting down into this period here where there's likely to be a minor bottom that's formed in here. If this didn't form it, if I go over to the daily chart, this actually looks like it comes in around the beginning of August. So there may be one more downside move here into the beginning of August. That's why this lines up down to the beginning of August, somewhere over here. And then when that low is in place, we would expect it to rally. But because of this formation, we would not expect it to be a runaway rally, just somewhere rallying up in here. And then you can see this dominant force over here puts you out into February. So that says that we could be fooling around and going up for a few months in here after this low, but then after that, it's likely to be moving down again. So resistance levels in here, 365 to about 410, 415, and it could get up there again before starting to move again to the downside. So the weekly pattern you can see in here pointing to a potential low, the daily pattern pointing in here to the same timing, a potential low. And that meant that, for people that are interested in buying, well, you're buying in somewhat negative conditions if you did that. And if you did that in this next dip, it should be the smallest size that you make an entry in because you would be entering on the long side against what all of the momentum conditions are. So we always say when you do that, it should be with your smallest size that you enter with. So that's a look at natural gas. And then I'm going to switch over here and look at silver. And then here is the silver market. So here is your weekly chart right over here. Now you'll note in here that see this blue line right over here? That blue cycle is because this black cycle is what we had in here. And the market proved to us that it had shifted wider in here. Now, we have four sets of eyes looking at these cycles. And often my team will say to me, hey, Slim, look at this cycle over here versus what you have. Or sometimes I'll do that to them. So we're really good at that, at looking at potential shifting in markets. And you can see in here in the silver market, the cycle patterns look really good. The declining phases that you see right in here, we don't really put those in until we get into this bottoming period right over here. Katie keeps our cycle bottom, cycle low tracker, which she looks at all the important symbols. And when we get into the periods of risk, she notes that. When we get into the bottoming, she notes it. When we move out into the more positive, she notes it. So Katie does a great job with that tracker that we have on the cycle lows. So we do publish that for our members. So right now we're in this period, we're likely to get some kind of a correction. Now gold is acting a lot weaker. The momentum in gold on the weekly pattern or the intermediate has now softened a bit. Whoops, didn't want to do that. Let's go over to the daily in here. So we're going to look at the side by side in here so you can see. Our analysis simply, when you look at this, is that it's positive. You can see these cycle patterns, 1, 2, 3, pointing to the upside. Momentum on the slim ribbon, positive. Momentum on the reversal Scott, positive. The slim ribbon PO, positive. Look at these arrows, which tell you upward momentum likely to come back. And of course, that happened. This is a level 4 indicator, as is this one down in here, our option bias indicator, which when it's green is telling you keep your option positions biased to the long side. When it's negative, it tells you keep your option positions biased to the short side. I can't even show you a negative period right in here. I can show you a period right here where it declined very sharply. And then we got these two orange warnings right over here, four of them actually, which said bottom warning. So the OBI is a fantastic indicator. And again, that's for our level 4 members. That tells us right now everything in here still looks positive. You can see right in here you had this dark cloud cover as it spiked up here to 39.57. This time frame right over here where this bottom comes in, this bottoming period, is 8.4. Now, I would expect, and maybe that's happened already, that we're going to get some pullback in here and then set up this buying opportunity. So you can see that this right over here points to 8, right around 8.4. So that's that pullback right in there, matching this cycle right over here. The next cycle over here is 9.7. That's the first week of September, and that's this one over here. I'm showing both of them because I don't really know if it's the first week of August or first week of September that this corrective period, which is likely going to come, is going to end. All of this could set up a very big upside move, getting it up here into the 40s very easily or higher. So we're going to get into a period here in September, October, that this is likely going to be showing a strong up move in the silver market. At the same time, the gold market is really not acting anywhere near as well. So there is a let's see, I covered the silver market. There was a question that was sent to me regarding the softs, the softs, in other words, the grains and maybe sugar, the foods. And the question was, it's a little strange that soft commodities have not joined the metal commodities rally at this point. When would you expect things like wheat to potentially make some kind of move, especially since the Ukraine war has kind of taken a lot of the world's wheat production offline over the last couple of years, which should have changed the balance of supply? Or do the softs just live by the beat of their own drum? Great question, actually, on that. And I do the analysis on the softs every week. RV brings that great analysis on the Future Speak show. So you can really see that every single Wednesday if you have interest in that. Again, that's for levels 2, 3, and 4, the Future Speak show. Let's take a look as we look at these softs. Now, we have been very negative on the corn market, /CZ. ZC. And the reason we've been very negative in there is because the cycle patterns have told us so. You had this low here, the failure here, the breakdown here, and the timing that it would decline here out to September. We have seen that happening, and look at the rhythms in here. You could see that they look very good in the corn market. So this is one example of softs and corn really beating its own drum, as you say. Let's look at soybeans /ZB, which here is the same thing, though it's got an earlier potential bottom in here than the corn market. So this could be have bottomed or bottom already.
Slim, that's bonds.
Oh, well, thank you for that. Anyway, the bond market looks like it's about to bottom right over here. And see what I mean about needing to have 4 eyes on these charts, 4 sets of eyes on these charts? Well, I wanted to look at the bond market anywhere. Yeah. So here's the soybean market. Look how similar that is in timing. So the bond market bottoming here, but the soybean market moving out about to where the corn market is pointing to. Note the difference. Even though momentum is negative in here, this structure is positive, meaning that once this bottom is in place, you could get a pretty good rally out over here because that's an important low. When I look at the daily chart in here, you could see this points to maybe a low coming in the next couple of weeks. So the soybean market, though it's been weak, is certainly looking like it's has a better structure than the corn market. Here's the wheat market right here, and this is different. You can see it had this big rally and momentum is positive. So what you're saying about Ukraine and what you're saying about supply is reflective in the chart in the wheat market. I wouldn't be a bit surprised in the wheat market that and I noted that this base was forming. Now look at this as it gets down to this level. Look at this timing. I'm just going to highlight this as this begins to turn up. That bottom looks like it's in place. We're going to need confirmation. We're going to have to see the slim ribbon reversal scout turn upward, this turn green over here. And if that were to happen, then we would believe that the probabilities are high that we're going to be getting a test of these levels somewhere out over here. So we have to get more information because right now this is negative there. So we still need to wait for that. But the wheat market is better than the other ones. And I'll just show you one more while I'm at it. This one really is sugar. And the sugar market timing pretty much the same way. Look at what we targeted at this fib extension zone. Look at the timing, great rhythms in there. And you can see here that you have this rally that's starting on the short term in sugar. And if I look at the timing here, this says second week of September when this cycle is over with. This right over here says second week of September when the weekly is over with. This is what we mean by synced lows, sink the bottoms. That gives us a sense that right now, if it tried to rally, it's not likely to be able to continue, but then come out into this period and here in October, November, it may be able to have a better time of it. So your question about the softs, I think I answered pretty well in there. They are much weaker. They are beating their own drum. The movement that we're seeing right now in the metals markets is pretty unique, and it's maybe anomalous as we see the markets reflecting what is likely a huge borrowing coming, a lot of money printing. That eventually will bleed into the other commodities, but right now we see that it's not, especially when you look at the oil market that still looks lower to us. So there's a lot of reasons to believe that a lot of these commodities are not going to do all that well. And at some point in here, and maybe it's towards the end of the year or next year, we'll start to see the metals have some kind of significant correction, but they're really now looking like there is more upside. Again, silver, I think, is going well into the 40s. So that's answers all of my questions. And I'm going to turn this over to our team.
Okay, I'm going to share my screen. And let me know when we can see MicroStrategy.
Good to go.
All right, great, thanks. This is the weekly chart of MicroStrategy. We've got, let's see how long these cycle brackets are. These are 15 bar cycles, so these are pretty short. We are inside this weekly cycle timing window. And look, we had the downturn in momentum here after we made a peak in this previous cycle, formed a trough right here, and moving up in the rising phase of this new cycle. So we do have some projections here, the intermediate 61.8, 481.68, maybe 515.09, that's up at the 78.6% extension level. And beyond that, we've got the all-time high at 543. So we have, this is a period of risk here. Could we get another downside move? Sure, we do have earnings coming up. Anything can happen on earnings, but we do have this upturn in momentum that helps us to confirm that this intermediate trough in place. Then let's move over to the daily chart. And on here, we have 24 bar cycles. You can see that we got up to this area of some resistance, which represents these prior cycle peaks, this one back here and this one here, and had some trouble sustaining a move through that area. And we are approaching this daily cycle timing window that's 722 to 731. So due to start next week, this support zone is no longer rising. So I'll take that out, and we would project down into this area. The 38.2% fib is at 417.42, and the middle of that is 406.23. So somewhere in there, and that could set up a buying opportunity. Again, you've got earnings coming up, so you'd have to take risk during earnings if you were to buy too early. Depends on your trading style and what you are willing to risk there. The next one we have to look at is Disney. Let's see, Disney, we've got a 40 bar cycle that is broken into minor half cycles. And this minor half cycle, we've got the trough due in the September timeframe. So we will take a look at the daily chart in a moment and see how that lines up with our daily cycle. But we formed our low here. We had a nice move up. The reversal scout is beginning to curl over again, having difficulty sustaining a move at this time through these cycle peaks. If it is able to get through there later on in the cycle, perhaps out into the winter, depending on what kind of a retracement we get in this minor half cycle, then we would project up to this major 78.6% fib around 130. And after that, we've got this peak up here, 144.46. Now I want to take a look over at the daily chart and see how the cycle that we're in on the daily chart, how it lines up with this minor cycle trough in September. So here is our daily cycle. We've got a 52 bar cycle, and it is due to trough in the later part of August, beginning of September. So you will notice that that lines up quite nicely with that. And what are we seeing? We made a move up to that prior cycle peak, backed off. We have the reversal scout that has turned negative, and a slim ribbon that has gone from positive to neutral. So we haven't violated any important levels yet. We're still holding in this support zone that was formed from this cycle low and that cycle high. So we're just kind of moving sideways in here, and maybe earnings, which is coming up at the beginning of August, might be a catalyst. So we are looking for a trough to form out in this time frame. And the last one that I am going to look at is Tesla. Tesla, we have a 26 bar cycle with a trough that is due 929 to 11.7. So we had this move up and stalled in resistance. Notice that this cycle was basically flat. It isn't positive or negative. It basically gave up the entire move almost exactly. And so when that happened, we thought that this had a high probability of stalling in the resistance zone, and you can see that it did that. And then we had this return to negative momentum on the reversal scout, and now just moving sideways. We haven't violated any levels here yet, just moving sideways in this support zone right between this resistance level and the bottom of the support zone here. So again, this timing window is due to line up basically in the October timeframe. So let's go over to the daily chart and see what's happening there. So this cycle is due to trough in August, end of August, beginning of September. That would be a little bit early. So this might be the cycle over here that gives us the intermediate and daily cycle troughs. This one, we've just now gotten the return to positive momentum on the reversal scout. We've had a slight improvement in the slim ribbon, gone from negative to neutral, and we are at an important level. The top of the resistance zone is here. And then we have the 78.6% fib at 342.82 with a possibility of trying to retake that high at 357.54. Again, watch out for earnings. And I think I'll turn it over to RV now. You have at least Micron, maybe another.
Yeah. Okay, awesome. Thank you, Katie. Let's go ahead and just share Micron. We'll hand it back off to you after that, Slim. On the intermediate term for MU, we are in what looks like a high that is now trying to form here in MU, but there's a trough here that is due 8.4 to right around 922. On the downside, 104 to around 96. On the daily time frame, we have lost this low here, and what I am now going to be actually looking for a trade idea is a pop back into the 116.79 to 120.41 area, form that little lower high, and then see this roll back down through this old low and then down into this zone here. That trough is due 7:30 to right around the early part of August. So let's just say that time frame. Okay, so this is what I'm going to be actually watching for in MU. Not a good look here in that chart. Okay, so I'm going to hand it back off to you.
All right, I am back. All right, so that's all the questions that we had. I hope that was a great presentation and an illustration of how our analysis works as we look at multiple time frame analysis and how you get great market feel and an understanding of important levels and when you have a high probability of making a entry decision and what direction that is. That's all so important in the style that we use. And you could actually learn more about askSlim.com. I'm going to tell you how. We are now getting ready to release in beta our Slim AI. And what Slim AI is an amazing AI that's built on an extremely large language model that has just a wealth of information. And it has been given all this information to be able to coach you in a way that I would coach you, direct you to askSlim content, help you with all kinds of mindset uh, processes that we have built in there, and just an absolutely great way for you to engage with me. When you go to askSlim, when you go to the Slim AI, and I'll just give you a little peek at it right over here, it looks like this. If you click go to call, you'll be able to talk to me. Essentially, it's my virtual twin. It speaks in my voice. It speaks 13 languages. So whatever your favorite language is, you can speak. It will answer you there in your language and just be able to help you. I've clicked on here. I'm not going to go to a call because we don't have it set up yet for you to be able to hear the responses, which I promise you are in my voice. And I just asked here for first-time visitors to askSlim, give me 5 reasons why they should become an askSlim member. Give me brief answers, and I'm just going to say 1 to 2 sentences. And I'll type that in, and you can see that Slim is thinking, Slim AI is thinking, and now it's responding. And it says here are 5 brief reasons why a first-time visitor should consider becoming an askSlim member. So I didn't prompt this at all. I don't really know what it's going to say. It says daily access to technical analysis and market insights for major indexes like the S&P 500, NASDAQ 100, Russell 2000 to support your trading positions. Use of proprietary tools like the Slimulator Momentum Tracker, trade planning worksheets to organize and improve your trade planning processes. Educational resources, including a vast video library covering trader psychology, technical analysis, and trade planning to build your skills. Participation in supportive community with access to live events, Q&A questions, and Discord for ongoing learning and interaction, and flexible membership levels tailored to your trading style and goals with easy upgrades or cancellations to fit your needs. This is a great answer. I didn't prompt it at all. I just gave it this one question, and you can get an idea. You will be astounded at how this can give you support. We're going into beta and it's going to be released in the next week or two. So those of you that take advantage of our special that's coming up, you'll be able to get in on the beta testing of this, and that will give you full usage of it and just an amazing amount of information. For those of you that are workshop members or have invested in the workshop, Slim AI knows the whole workshop, both of the workshops that are in there, and you can ask it any question about it. It will know you're an askSlim workshop member, and it will know if you're not. And then it can guide you through those workshops. So you're always supported. If you have mindset issues or trading slump, there are processes in there to help you with. It is just mind-boggling the quality of the information in Slim AI. So I want to encourage you to take advantage of what Matt is going to be showing you next, because it is just a great opportunity for you to get in on the beta testing and to learn so much about askSlim.com. All right, so that's it. That's our questions for the week. And now I'm going to turn this over to Matt.
All right, great work, team. Awesome information. Excited about the release of our Slim AI. I've had a chance to obviously work with it, and it is the ultimate askSlim resource, interactive resource when it comes to the depth of knowledge that the team has created and the decades of effort and work that Slim has done. So absolutely take advantage of the beta. You'll get to learn on a 24/7 basis about the methodology, and then you can take those answers that you create for yourself and ask us questions and really create a very comprehensive understanding of what we do here and being able to apply it for your own personal trade planning. Okay, so I'm going to just do a very brief review of the askSlim membership services and the current special offer that we have going on. You should see the homepage of askSlim. For those of you that are not familiar with askSlim or are brand new to us, follow us on YouTube, wondering what we're all about. We do offer membership services where we provide our subscribers with technical analysis, trade planning tools, and comprehensive education. And that's for various trading styles, including a separate service for day traders. So I'm just going to jump over to the membership area. You can see here we go from level 1, 2, 3, 4, and then our separate day trader service geared towards intraday swing traders. And when you increase your membership level, what happens is that you're going to get a more comprehensive and broader and extensive coverage of markets, stocks, ETFs, and then you also are going to start receiving, as you get into level 3, you go beyond just seeing and learning aspects of what we do into the applying of the methodology and technical analysis. So you start to delve into specific trade planning tools that support a process for applying the technical analysis, technical evidence for trade planning. You get to see the team apply our methodology in action on our charts, on Discord. We have trade ideas, and it's an ongoing opportunity to benefit from not just the seeing and the learning, but then what's that next step? That next step is, how do you apply it? How do you assimilate that information from the charts and then see it happen at different time frames for different trading styles? So that's what happens when you get into level 3 and level 4, and then specifically in level 4 is when you get direct access to our live charts, and you can import those along with our custom studies and indicators. But right now, this is the final weekend for our level 3 special. And as you see up here, it was a level 3 special that was 50% off. So this was for 1 month. It's basically a 1-month trial. You get 50% off. Regular price on a monthly basis is $119. This is for $59.50. I spent about 2 hours last Thursday, and I did a webinar where I walked through some of what's new at askSlim, areas of askSlim that you may have not even realized existed, even if you are a premium member, because we do have so many offerings and so much depth to what we do. And then I also did a trade planning review with level 3. So it is about a 2-hour webinar that I put together. There is a replay. There are chapters specifically geared towards what was new, and then the level 3. If you really have an interest in askSlim, you could check it out and let me know if you would like to see the webinar. For our members, this is available right on your dashboard. If I will be sending it out again this weekend as we conclude our level 3 special. So this was an extremely in-depth webinar talking about what we do at askSlim, going through essentially the dashboard in a new format that we're creating that will be released here likely next week. And then specifically, how do you trade plan off of level 3? What's a process look like that you can use? Okay, that's what I have for level 3. If you do have an interest in signing up, you can click on the special offer link here, and then that will take you to our level 3 page. And then the buy now button will get you to the area of the checkout where you can purchase the trial.
Matt, I have
right.
one question for you.
Yes, Slim.
If in the case that we have a lot of members out there that are watching this that happen to be like a level 1,
Okay.
and they want to be a level 1, but they really want to get a month to look at this, how do we handle the membership that, once this special passes for them and they don't renew at a higher level, how do they get back to their level 1 membership?
Sure. Great question. We get that question a lot. So what we'll do for you is we'll pause your current membership. So if you're level 1 or level 2 and you want to stay at that level for now, we'll pause that membership, and then it'll run its course for the level 3 trial. Right before that expires, probably a few days prior to the expiration, we'll send you an email to see if you would like to continue with level 3 or maybe level 4. And if you would like to then upgrade, what we would do is we would apply the prorated credit for any remaining level 1 or level 2 balance to your new level 3 or level 4 membership. But if you chose just to stay on at level 1 or 2, there's nothing you'll need to do. Your membership would just resume.
Great answer and great way to handle it. So thanks for that.
You're welcome.
Great. All right, so I'm going to take it back in here and we'll move
Sounds
on
good.
as we begin to look at the analysis of the stock market. All right, stock market analysis and projections. First, this important information. This tells you about our analysis and how we approach analysis and how important it is for you to use your own trade ownership as you apply our analysis or any analysis that you get from anywhere. So trade ownership, a very key aspect to success in trading. You must own it, because if you don't own it, you're not going to manage the risk. And that's really what's so important to success. Your own trade with somebody else's information. If that information is quality, then you can apply what seems to fit for you for your own membership. But then if it's not working, you need to take it off. And it has to be your decision. All right, market brief for this week. Well, the stock market surge runs unabated as the investors keep buying, not allowing any dips, as we have seen. CPI and PPI show muted inflation as the effects from the tariffs is yet to be seen. That doesn't mean we won't get some upside ticks in inflation, but it may not be as big as what a lot of people had feared. The biggest market move of the week came in the report that President Trump was about to fire Fed Chair Powell. And then the market moved on very sharply, and the news came out that, well, he had denied that. And the video of him denying it was delayed, and the market returned all the way back up before we even got a sense what he had said. So a big drop and then a recovery to the plus side on the president's denial about firing Powell. He says he's not going to fire Powell, but believe me, he's going to verbally beat him up between now and the time when he has replaced him. Earnings season started with the banks mostly beating on strong revenues. They haven't done all that well, actually, on the move after the earnings. We saw Netflix come out. I didn't list that here today, and Netflix got hit pretty hard, even though the earnings were on the good side. And that's what happens when the markets anticipate a lot. For the indexes, with the current valuations, there's little room for error because, of course, we're at record level of valuations and the market can stay up for quite a long time while it is at record valuations. It just means that when it tops, and when we get a sense for that, and I'll show you in a little bit what will be some indication of that, then we could see some pretty good volatility. But in the meantime, the markets are strong and powerful. For the week, Russell, S&P 500, both up about 0.5%. The NASDAQ up about 1% as these tech stocks do overperform, and the Dow run unchanged on the week. So that's what happened this week, and the background news just didn't seem to make any real difference. We're going to review the S&P 500, NASDAQ, Russell, and the RSP. I had somebody ask for the monthly S&P 500, so I'll put that up. And I know I haven't really talked about it with the team, but I know at some point we're going to put all of my monthly analysis up on YouTube. Is that right, Matt? We have a plan to do that. So I'll put up I'll show the monthly now, but then we'll show the other markets in the video that we did for members that we'll put up pretty soon. So that's what we're going to look at in here. SPX, NASDAQ, Russell, RSP, and our proprietary indicators. And DJV asked me a question about the market cycles in there and whether or not the short-term cycle had been seen in the S&P 500. And that's really a good question because we've seen almost no dip at all. And I'm going to show you a way that I kind of fine-tune that, the look at that. Oh, we'll get back to that in just one moment. So let's take a look now at, as we look at the S&P 500. So I'm going to look at SPX. That's set to SPY, actually. And we're going to look at SPX. So we'll start here looking at the weekly. So the, am I freezing? No, looks good. So what we have here are our cycle analysis and the cycle brackets on the bottom. And you can see this very important low that occurred right over here in April. I had originally thought that low was going to come later out into May, but the market didn't want to because this dip was, the break was so strong and so fast that the rebound was fast also. What that did was it narrowed the cycle brackets by a minimal amount. And then once the market turned up right over here, it proved to us that that bottom was in place, and it has since roared to the upside. S&P 500, a 1,500 point move in just about 4 months. Just an astounding amount of move that we've seen in there. So where are we right now? Well, you can see this rising phase here, and then this potential corrective, minor corrective phase here. We've had no downtick in here. So generally, when there's a corrective phase in the mid-cycle, you could see in here it was very obvious. Here it was very obvious. Here it was not so obvious. It was just a weak to the downside or so, but we've had nothing in here yet. And that's why I still believe that there's going to be some modest little pullback in here and then moving to the upside in here. So when I say that, what I'm talking about is a bullish opportunity, is bullishness. This is because I have an arrow pointing down here. That's not bearish. It doesn't say to trade short. It just says that it's illustrating this rhythm that is right in there. And here's that illustration that you can see right here. The market very bullish when you look at that. When I look at the daily chart here on the S&P 500, this is very interesting because you can see these last 4 cycles in there riding the slim ribbon to the upside. All of these cycles in what we call a right-hand translation. If you take the cycle analysis workshop, it's a fantastic investment. You'll learn all about how to use these. So the slim ribbon often gives you support, as you see right in here. If I go back to where the bearish market was, you could see the slim ribbon giving you resistance, as it did right there. Here on the bottom, where the option bias indicator was red, it said keep your option position short. Here, where the option bias is green, it says keep your option positions long. So all of this information is fantastic. Now, when I look at the daily right over here, is this little blip on the Powell sell-off? That's what DJV asked me about, a 17-day low. Is that the low, or is there still another low coming right over here? So I'm showing both examples in here. Now, I do anything I can to fine tune this and to get a good understanding of whether or not that 17-day low was this cycle low or not. You could see there was one here at 16 days, 16, 19, 18, 17. This is an 18-day cycle, average cycle period, as we say. And this time period that's left for a decline is gone, right? There's really not much left. You could get a pullback for a couple days and then move up again. I don't know which of those is going to be accurate. Will there be one more dip? And sometimes when I don't know and it's not really clear, I put that information in there, and then what I'll do is I will try to find information that helps me with that. So I'm going to move in another chart right over here, and usually I don't show this and I don't keep this up to date for our members, but you can see in here, here is the daily chart that we're looking at right over here, and here is the 2-hour chart that is a reflection of the exact same thing you see on the left. The 2-hour chart has its own cycle rhythms. And when I look at each of these daily cycles, how they formed in here, and you could see the positive cycles, each of them have a half cycle that you can see in there that makes up the 2-hour cycle. So if I look here on the 2-hour cycle, this is telling me that it's a pretty high probability that that 17-day low that you see there on the daily chart right here is the low. Let's just take a look at this cycle, this whole cycle right in here, and this whole cycle right in here. And you can see that this low here aligns with this low here. And it looks like we are in this next rising phase. Sometimes I need to dip down into a shorter time frame to get clarity on that. And DJV, I hope that helps you in seeing that, you know, there's a consistency in the inner days. Now, I had some questions over the weekend that came to me during the week that said to me, can you do cycle analysis on intraday charts? My answer to that is only if it's a function of the daily. In this case, this is, you know, essentially the daily cycle. I find that under 2-hour charts, they start to get erratic. 1-hour charts get more difficult. So I don't go as short, anything shorter than 2 hours. But you can see the clarity in here as you look at this. And it does say to me that this looks like the low of this cycle. If that's the case, and I have proof of that, then in the next day or so, I'm going to remove the alternative look in there of the way that looks. I'm going to add in this as the cycle low right over here. And then what I have is an important level. So if you keep rallying and then begin to move down and break that low, that would be a negative occurrence. So I wanted to show you how I break it down into a shorter time frame. Essentially, some people would call that fractals, as I do that on this chart. So here is your chart there on the weekly and on the daily, and everything that you see here, every single thing that we look at, market cycle patterns, the structures, the phasing in there, our momentum indicators, all of them, everything is bullish still. So any little dip in there, the market has not allowed to occur. And what we have is a swamping condition in here and this little minor move down over here, calling for that being the bottom. Now, this next cycle right over here bottoms on 813. You can see I have this pointing out to that second week of August here on the weekly chart. That's why, because there's no correction in here yet, and there likely will be. So my assumption is that once we get a signal that this is going to move down, then we'll start to look at the potential for how far it could fall and what the timing is of that, which really looks like out into mid-August, to get this weekly cycle to come down over there and get ready for the next upside move after that. Everything we look at in here is bullish. Now, how does that project in here? So I'm going to move this out here, and I'm going to look at the positive daily projection. If this continued and remained positive, it would essentially look like this. You can see that. You could come up in here, make these higher levels, and this fib extension is at 64.23. This monthly extension and the bottom of that, the 78.6, is at around 84.80, 84.85. Those are all reasonable upside projections in here were to maintain this bullish look that we have. Again, this looks like it's the cycle low right over here, so I'm going to put that in there, and that low number there is 6201.59 right over there. So I'm just going to duplicate this, and I'm going to say I'm just going to correct that. I do all this manual stuff, and I'll just show you what I do. So it's the low is 62. Sorry, that low is 6201.59. Do everything I can to put the most important information here. So without that low breaking there, you really don't have any reason to think that you've got a negative situation. This is the positive translations continuing. And you could get the rally and come down into this time frame, stay positive, and at the same time satisfy what we're looking at here on the weekly, because it would just be a sideways corrective period in there. Now, if something else happened, then it was negative, and let's just look at the negative possibilities. You could see that right there. Well, what would happen would be you'd get a rally in here that would fulfill this upside move. Maybe it gets up to this level at 64.23, comes down, and then breaks this cycle. If that happens, then if it happens early, there's a lot of time for the market yet to fall. Then you could get a rally and still struggle out in there as you're trying to make the base in here on the weekly cycle. So you can get a look in here. This is what it would look like if it was negative. And what would happen was that this would go yellow or go red over here. This would go red here, start to give us downside arrows, and this would break below the slim ribbon. This would start to get the reversal scout turning over first, because that's first, and you would get the negative scenario. This negative scenario right over here, as you see, is lower odds than what is the positive scenario that you see right over here, which is the positive translations and positive momentum and higher odds. That's what we do. We look at the probabilities and we let the market tell us what the conditions are. Right now, the market conditions are extremely positive. Let's take a look at the monthly. I'll just move the monthly in here, and let me just get a monthly chart and blow this up. And here's your monthly chart. So we had this tariff panic in here, That's way out of place. You see this low right over here aligns with this low here, and then we got this momentum turning back up and moving to the upside. These projections right over here are in that area of the 64, 64.50, 64, 65 and a quarter right there. That's where the monthly projections point up to. And then somewhere out over here, when we start to get more bearish indicators on the weekly and on the daily, we're likely to get into the topping phase for this cycle right over here. That calls for late 2025 to mid 2026 as a corrective period or a bear market. We don't know where the peak is going to be. Right now, you can see I have the fib extensions, the fib supports in here, and how each of the one of them would represent a decline, what the percentage decline would be from the level we're at right now. This is all going to change. If this keeps going up, these are going to be moving up. But right now, we're not concerning ourselves with these downturns here. What we're concerning ourselves with is the upward momentum on the monthly, which is essentially putting a force on the weekly, giving you the upward momentum. It puts a force on the daily, giving you the upward momentum. When that's changing, then we'll first start to see that on the daily chart. We'll first start to see it in the 2 hours, actually, then the daily, then our reversal chart would turn down, and everything would start to give us a very, very good sense for things changing. So I wanted to give you a good sense for how we look at things, why we have been positive here, and how the market has told us that, and what will tell us that things are changing as we look at both scenarios, the positive scenario, which is the highest odds, and the negative scenario, which right now is a lower odds, and maybe a lot lower odds, based on everything that we see here in our sum of the evidence analysis. Let's take a quick look at the NASDAQ, and I'm not going to go through that kind of detail, but you can see in here looking at the NASDAQ, it is very much the same right over there as you look at the NASDAQ. Now, the NASDAQ has been stronger than the other indexes. We don't really see a pullback in here yet, and maybe this needs to be updated to that being the trough right over there. It probably makes sense that that's the case, and I'll just do a next day or two. I will change that because it does look like aligned with the S&P 500. This low right over here is already made, and we're already in this rising phase. When I look at the Russell RUT, you could see here that this is much the same, except for it's very far away from the all-time high. This is a key level, which is, let's say, 2310, which is the dominant 78.6%. We call that the repair level because if it's got strength to get up to the 78.6, it usually has strength to get back to the next high. So that's why we label this a repair level or a warning level. Right now, you can see in here that it's moving sideways for the last 2 weeks. And starting to, pull back today, and it's got a little low due just like the rest of the markets, either here or over here, as I said in the S&P 500, and then it's likely to move up again. Again, you could see momentum strong in every single one of these things that you're looking at here, actually this is just all positive here on the option bias indicator. Look at these upside momentum warnings right in here for momentum. Just phenomenal. If you're not a level 4 member, I encourage you to step up to it because these indicators are just so absolutely great. So that's a look at the Russell. Let's now go back for a second and look at the S&P 500 on the weekly, SPX. And you can see that right there and what our analysis is. And you can see that how far it is above this high right over here. It's done spectacularly well. And let's look at the RSP, which is the equal weight. And you can see the same cycle rhythms in here just about. And I also put the MIDI in there. That's the mid-cap stocks, which aligns pretty well with that. But look what you have here. While the S&P 500 is well above here, you see the RSP is stalling below this level here as it's been here for about 3 weeks. And this is because there is a lot of concentration in these high caps, widely held stocks that are pushing the indexes up while the rest of the market is starting to struggle. in Future Speak, I heard Arvi make comment on that also, that there was a stalling going on as we looked at the mid-cap stocks. So all of us keeping our eyes on these things, and you can see in here that maybe we were going to make a double top in here and then get out into this correction that we're looking for out into 2026. That's when that begins. So here you could see the RSP here looking at this 2 weeks where it's just kind of been choppy in here and not going anywhere. So the broad market's starting to struggle where the other markets are doing much better. I think I covered absolutely everything I wanted to cover. I think great depth in these markets, and I hope it was a huge learning experience for you. I want to remind you that we only have 3 more days on our level 3 trial. Earlier in the show, Matt showed you everything. It does include our amazing Slim AI beta that's going to be launched in the next week or two, and you'll be able to get coaching from Slim AI as if I were coaching you. Just absolutely amazing. And everything else that you see on this list, including 1,000 videos and the great Future Speak show that that Arvi does every single week. All of the work that this team does, great work from Matt, super work from Katie and the work that she does. And now Katie is spending more time looking at longer term things, which are very, very important to investors. Go to the top of our website right over here, click on that 50% level, 50% off on level 3, and get that $59.50 deal, non-recurring. So you only have to pay once, and then you can decide what you want to do. That is it. Really ran through it all. If you're brand new, go start learning from this team of pros by going to askSlim.com. You'll just love our content. Hey, team, join in. What do you say?
All right, great job, everyone.
Great
Appreciate
job,
the
all.
attendance
Thank
from
you.
members, and always appreciate your comments and questions that come in.
All right. See you, everybody.